Hi, I'm Garth McKenzie from traderscorner.co.za. This is your weekly look at the S&P 500 and the Nasdaq indices. So as always, we start with a look at the daily chart of the S&P 500, and you can see quite clearly there that the market broke out above some significant resistance last week. That came on the news of the COVID-19 vaccine from Pfizer, and you can see the market gapped up through 3,500 last week, Monday, and that was a very bullish break to the upside. Since then, the market has consolidated a little bit. It's come back and retested that breakout area. But what was previously a resistance area looks to have offered support, and the market does appear to have pushed up off of that 3,500 support region, and it closed at a daily and weekly all-time high last week on Friday, and it continues to look fairly strong heading into the beginning of this week. So whilst the market is above 3,500, that still lends itself to a fairly bullish bias looking further out. If we then take a look at the hourly chart, this shows the trading activity in somewhat more detail recently. You can see a whole bunch of gaps up on that chart. Quite unusual to see so many unfilled gaps in such a short space of time. But that's what we've got here. Market's been gapping up significantly day after day over the last 2 weeks or so, heading into the US election, and then since the elections continued to make some bigger gaps as well. At this point in time, you can see the trading range there generally between 35.25 up to 36.25. The moving average is still pointing upwards. You've got your 15-hour exponential moving average pointing upwards and your 50-hour moving average also pointing upwards. So overall, a bullish bias here, but this market would need to break out through the top of that trading range at 36.25 to open further upside. And if it did that, then from a technical standpoint, that opens potential for another 100 points to the upside. So you could be looking at a move towards 37.25, 37.50 quite feasibly if we saw the S&P breaking above 36.25. Then let's take a look at the Nasdaq. What's interesting here on the daily chart of the Nasdaq, first up, is to note that this index is not actually making new highs like the S&P 500 is. And that lends itself to what's quite commonly spoken about at the moment, is the fact that there seems to be a little bit of a rotation towards value and away from growth. Now, obviously, the Nasdaq very heavily skewed towards growth stocks, and the fact that we're seeing a bit of a rotation out of growth and into value talks to the reason why we've got the S&P 500 making new all-time highs and the Nasdaq not making new all-time highs at the moment. Having said that, though, this Nasdaq chart is still pretty bullish. The significant technical area to watch at the upside here is 12,200. We'd need to see the Nasdaq breaking above that in order to open further gains. At the lower end, 11,600 offers some support on the daily chart, as you can see there. And it seems for the time being that we're getting a bit of consolidation between 11,600 and 12,200. But a break above 12,200 would be needed to open further gains here. Then last up, let's take a look at the hourly chart of the Nasdaq. Here you can see the recent trading activity in more detail. Notice that the uptrend through November is still very much intact here. On the short term, a break above 12,020 needs to occur in order for the market to move up to that 12,200 region. And then ultimately, as I said on the previous chart, a break above 12,200 on the Nasdaq would be bullish for further gains beyond that. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.